Hello everyone, it's Petko Alexandrov and I continue with my series of videos while I'm traveling. Today I will be recording from the Bamboo Beach in Bulgaria, which is a fantastic place to relax basically. And in this video I will talk about the Forex account management, which is essentially important while you are trading. It's a very common question and I receive it daily from the students and the traders, how much they should start with, how much should be the risk in the account. So I would like to cover that in today's video. Now, I don't want to suggest anybody with starting amounts, okay? This is a personal choice. It depends how much you can afford. It depends how much you want to risk. What I like to say is that you should never be risking more than 10% of your saved money. So let's say you have $10,000 saved money, you should not open a life account with more than $1,000. And I have covered that in my newest course, the cryptocurrency investment, where I teach the same, that when you are investing, again, no more than 10%. And if you are trading at the same time, another 10%. So totally you will be risking 20%. Don't ever put in a real account all your savings. Things might go wrong, you might lose it all. So you should stay really safe with no more than 10% of the account. And now when I say 10% of your savings, it doesn't really mean that you will be risking all of them, right? This is how much you should open an account. So again, if you have $10,000 saved and you open a life account with $1,000, this is just fine. And from this $1,000 account, you should not risk more than 2 to 5% for manual trading, which means $20 to $50 per day for a single trade. And not just single trade, but I'll also suggest you to diversify the risk on many trades. So if you're trading manually and you have $1,000 life account and you're risking 5% maximum, this is $50. And if you have 5 different trades, each one, the maximum risk should be $10, okay? Which means total risk $50 if all 5 trades go wrong, which usually doesn't happen. And this is the idea of diversification. And when I cover that in my courses, I teach that you should use different strategies in your trading. So if you have 5 trades, they should be based on 5 different strategies. So the chance that all of them go wrong is smaller, okay? So one more time, if you have $10,000, you should open a life account with $1,000, 10% of your savings. And from there, if you're risking 5% per day, this is the very good Forex account management you can keep. This is $50. Diversify that on 5 different trades based on 5 different strategies, and you will have a very small risk of $10 per trade or per strategy. And this is very important because the market is different every day, which means that one strategy will be profitable at one moment and tomorrow it might be losing. But when you have 5 different strategies and you are trading at the same time, or you're trading them simultaneously, well, they will compensate each other. And this is for the manual trading. Now, when it comes to algorithmic trading, things are different there. With EA Studio, especially what I show in my courses, we have a better risk diversification because we can trade with hundreds of expert advisors. Now, if I stick to the same example, $10,000 saved money, you open a life account with $1,000, how much you should be risking with the expert advisors? Again, no more than 5%. And it's up to you if you want to trade 5, 10 or 100 strategies. With EA Studio, we have the chance to create so many expert advisors that you could be trading 100 strategies in a portfolio expert advisor. For example, if you go with 0.01 lot, you can do that. Okay, in $1,000, in $1,000 account, I would suggest you to have no more than 10 expert advisor with 0.1 lot. Okay, or you might have 100 expert advisors with 0.01 lot. That would work fine as well. And quite often I receive the question for the expert advisors, like how many in one account, for how many currencies. I would suggest you to stick no more than 3 currency pairs, and way it will be a little bit harder for you to manage it. And if you use the portfolio expert advisor, it will be easier. This is why in the automated Forex trading course, I include 99 expert advisors, which should be loaded on different charts. But in the portfolio courses, the euro dollar, the 100 euro dollar, the 100 pound dollar, and the walk forward optimization, there I include portfolio expert advisors, which means that you can add all of them to a single chart and they trade, and I show in the courses how to follow the results. But what I wanted to say is that stick to the same account management. And something very important I would like to say at the end is when you block $10 from your account, this is the margin. It doesn't mean you're risking $10, okay? The risk is always the stop loss. That's a common mistake from the beginner traders. Usually what they do is they say, I will risk today $20, and they follow the strategy and they don't calculate the lot size. So the proper way is first to see what is the range of the stop loss. For example, in the automated trading, I use usually from 10 pips to 100 pips, so it's never more than 100 pips, so I know where is the risk. But the proper way to do the Forex account management before trading is to calculate how much you will be risking if the price hits your stop loss. Okay, this is the risk. When the price hits the stop loss, you're losing. This is the risk. It's not how much you are blocking from the account. So the right way is calculate the stop loss. What is the distance, how much you can afford to trade with, what will be the lot, so you will fit in your account money management, okay? Not the other way around. Usually people first decide how much they will be risking and they open the trade and the stop loss turn out to be more than what they expected to lose, okay? So first calculate the stop loss distance, see how much you can trade with, what will be the lot, and fit it in your Forex account management. If you have questions, of course, about the money management, the risks, don't hesitate to drop them in the comments below. I will do my best to answer as soon as possible. Thanks for watching this video. If you have enjoyed it, please give it a like and subscribe to get more of our free videos on YouTube. Cheers, guys.